Hey guys, welcome back to this YouTube channel. If you already haven't, definitely subscribe. Today's video is going to be focused on a tool I have started using in the last couple months called Prime Market Terminal. Now before I get into this, I want to let you guys know this tool does a lot more than what I use it for. Depending on your style of trading, you may actually use a lot more pieces of this tool than I do. I use it for day trading, so I use about 3 or 4 pieces of all the different confluences that it offers. If you're into swing trading, you can literally swing trade off this tool alone without really looking at the chart too much. I won't really get into that though. That is all on Prime Market Terminal's channel itself. So before we get into this, I just want to let you guys know there's about 4 paid tools that I think every trader needs. The first is obviously Tradingview. The second is FX Replay, because you should have a way of backtesting. The third, it doesn't necessarily have to be paid. But you should have a way of journaling. So whether you want to use TradeZella, which is a great paid software, or you want to use Notion, which is free, you should have a way of journaling. And this is the fourth. It's probably the most underrated tool that I found over the years. And believe me, I pretty much paid money for every Forex tool available in the last 4 years. I've tried them all. My only regret is I didn't find this one sooner. So anyway, guys, let's get into it. And I want to just show you how I use it. So first thing you're going to notice is there's 100 different things up here, depending on your style of trading. You may use a lot more of these tools than I do. For myself, the things I am the most concerned about is the COT reports, the DXM, which is the retail trading positions. And then the next thing I really care about is the news. Now, why I love this tool. So let's just get rid of the neutral scores because they don't really help us weigh the fundamentals. Why I love this tool is we know fundamentals drive the market long term. So what this allows us to do is look at fundamental sentiment. Now you could quite literally have zero knowledge of fundamentals, and this tool will tell you what the scores are for you. So for example, this whole stretch in November, you could see we were a lot more bullish fundamentally than we were bearish. So November 7th, we kind of started being bullish. So let's just quickly go check out what the Tradingview chart looked like from November 7th on. So you could see price was kind of moving sideways. Price was mostly neutral here. It wasn't leaning too heavily one way or the other. November 7th arrived and we really changed our sentiment to pretty much just bullish. And you can see how much more the fundamentals have really moved us. So this is very important. There's 2 reasons I like this. One, it looks at the main news, which you would get from a site like investing.com or Forex Factory. It takes all that into account. The other thing that I really like is the sentiment score for each day. So what the sentiment score does is it will read all of these articles for you. Their AI will, and it'll tell you if it's neutral, positive, negative. And these are the news that don't make it onto any of those news, on any of those news sites. So it's really nice. I don't want to sit here and read every one of these articles that came out in the last 2 days. I don't have the time of day. All I need to do is come here and look and be like, oh, the fundamental sentiment for the 25th is the last one we posted. Usually they're about a day behind. So this is showing that the fundamental sentiment today is actually in the positive. So out of all of these, we are fundamentally bullish on Euro, even though there was no news releases. So this is a really important one to me. The next one that I really like is the COT reports. This is the certifications of traders. Now, keep in mind, there are different ways of reading this. So I look at the asset manager reports. The asset manager reports are the bigger funds, big banks, big hedge funds, and pension funds, stuff like that. So these guys have an outlook for 1 year or longer. If we look at this, we could see they are almost 460,000 lots long. On the euro futures, on the US dollar futures, only 8,000. So this would tell me that euro is very, very, very bullish. They've been consistently stacking long positions for the past however many weeks, and this number just keeps growing. So this is telling me we're bullish into a good part of next year. There's also bank reports and stuff that come out in here under research and stuff that you can go read. And you can actually go look at the bank's projections, and depending which bank you look at, Euro's projections are 1.15 to 1.18, depending which bank reports you want to roll with. So this is huge. The other thing I like to look at is I also like to look at the leverage funds. So the leverage funds are your smaller hedge funds and stuff. And these are the 3 to 12 month outlooks. So you can see these ones are kind of shorter term, and you can see these ones here pretty much neutral on the US dollar futures, and on the euro futures you can actually see we're stacking shorts, and this will essentially be a short-term pullback. You can see the lot size differences versus the institutional funds. So even when we roll over and pull back, the pullback itself is going to be shorter term. So I do check this out. As far as directional bias goes, though, I would say this is more your shorter term, and institutional is your longer term. So this is my true, this is essentially the true market structure. It doesn't matter if price goes up or down. I know that as long as these positions don't start declining, we're going to continue going up long term. So very important to know. It's unbiased. It's better than market structure. It quite literally shows you how institutions are positioned. So this is very important. If you can understand this, and for those of you that swing trade, I'm going to show you a different cool tool after. And then you have the DXM, which is a really cool tool. So this is showing us that 92% of retail is short on Euro USD today. By the way, this updates every 5 minutes, so this isn't like some outdated stuff. Now what I want to talk to you about is if 70% or more of retail is going one direction, 70% of the time, maybe even 80% of the time, retail is going the wrong way. So to give you an example, retail has been short on this since the interest rate news back on, I believe it's this one. Hold on. Yes, so this is the Fed interest rates. So price came out here. Retail has been over 70% short on Euro USD this whole time. Now, if you weigh that against the fundamentals we have, the news sentiment, and just the basic, we're not violating any lows. I'm not really sure how retail is getting all these short positions, but this whole stretch, retail would have made money this day, and retail would have made money this day. So that's 2 days. So retail lost here 1, 2, 3, 4, 5, 6. There's a possibility that some retail guys made money shorting here. So 6 out of 8 days retail was going the wrong way. And you might think this is just a coincidence, and it doesn't happen often. It was the same thing over here. Retail tried to buy this the whole way down, And the reason is every one of these is a support and resistance and a demand, and we're bullish, so price has to go up, which looks all fine and dandy on the 1 hour, but on the daily, price had to come rebalance to continue. So it's a really cool feature, and I think this stretch was the exact same. I think retail got this right 2 days out of the whole stretch, and this has been a very consistent tool. And it kind of shows you how institutions are actually gathering positions. They're going the opposite way of this, I'd say probably a good 70% of the time. There is one other tool I use, and this one actually goes in with my strategy and timings and whatnot. And not this part, hold on. I believe... Okay, the ranges. So this here, one of the confluences this software uses is the first hour of London. Now, if the first hour of London is bullish, 60 to 70% of the time, it'll continue up. If the first hour of London is bearish, 60 to 70% of the time, it'll continue down. So it is essentially a good confluence. It shouldn't be your only one. So this actually falls in line with our timings and stuff. The other thing that they use is range expansions. The first hour of London expands 2 to 4 times. So you can see 1 range expansion, 2 range expansion, 3 range expansions, maybe almost a 4th. So that kind of helps you with your targeting. Usually once you've expanded double the first hour of London, everything from there becomes lower probability unless it is fundamentally driven that day by, let's say, somebody like Powell talking. They do have the pattern prediction. I don't use this part. They do have this other cool thing. And what this is essentially, if you want to find a pair to swing trade, essentially what you want to do is find a pair like Aussie USD, and you could tell most of retail is short, and you essentially just want to wait for this to line up with buys again. You can literally trade this on like a 200 moving average on the daily time frame, and you can basically bang out 2 hours really easy just going against retail. You do have to wait for the pullback, and I kind of paper traded a bunch of these. Like, I'm not a swing trader myself. It is something I'm testing out. But anything that's heavily weighted to one side, so Aussie USD, waiting for longs to align would be a good one. Euro USD, waiting for the pullback and longs to align would be an easy swing trade. And these are the kinds of trades you can literally just throw a huge stop loss on it and target something on the weekly and just wait 3 to 5 days. I would say you can get a 70-80% hit rate just based on that and a 200 daily moving average, 150 even moving average. So again, this would be more of a swing trading tool than your average day trader tool. But yeah, that's kind of the majority of the stuff I use. Very underrated tool. Most of our elite community is using it, and as far as I know, they all love it. So this really falls in quite well with everything I do. They do have a lot of other cool stuff like volatility, market structure, all that. I don't look at those. Volume, your macroeconomic data, I don't use any of that. Correlations, I don't use. Some of the research is pretty handy. And I do look at these once in a while, and these are essentially just releases from some institutions on banks. And you can just kind of look at their projections and what their positioning is. Again, these are very long-term projections, but they kind of help you gather where the market's heading fundamentally. So if you read 5 bank reports and all 5 of them are saying Euro USD is going up, there's a pretty good chance Euro USD is going up if the institutional positions are matching it, which they are. So that is essentially how I use this tool. There is one other part of the DXM that some people use a little different than me, but essentially where this crosses over is where you want to start going the other way. So here, essentially the shorts took over. This is where you would be heavily going towards longs. So pretty much for the last 10 days, obviously Christmas holidays and stuff, you shouldn't be trading. But long story short, 70% of the time, this alone can get you a directional bias. So really cool tool. For those of you that are looking to check it out, they did give our subscribers and our community members a 20% off link. I'll include it in the description for those of you that want to check it out. It's fairly cheap for everything it offers. And if you go on their website, they go into detail as to how every one of these works. So if you want to learn more, I would go to them directly, as they explain this in a lot more depth than I will. But anyway, guys, I hope you enjoyed this video. Make sure you subscribe. And if nothing else, I hope you learned something today. Have a great rest of your day, guys. I will see you in the next video.